Hello everybody, welcome to this week's weekly recap of what's been going on in markets and look ahead to next week. If you've never seen these before, we normally do them every Friday at Capital.com and we do a quick look ahead to the major announcements for next week. Lots coming out again next week. Then we'll jump onto our trading platform fairly quickly and take a look at the major markets, indices, foreign exchange, gold, silver, oil, cryptocurrencies, see what's going on and see what might be interesting to watch next week really, and catch up with what's happened this week. And then once we've done that, I'll go into the questions and look at any markets that you want to look at. So normally these run for an hour, these sessions. If you want a market looking at, you don't need to spam the chat, just put it in once and I will get around to it. But first of all, we go through our normal markets. Let's just do the risk warning. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences or results. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 78.79% of retail investors' accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Okay, thanks for letting me know. This sounds good. Always a concern with these things. I'm glad it's all working. We know at the moment inflation is a big issue. You know, we had US inflation data out this week, and we'll take a look at the impact on markets in a second. But that came in at 7.5% for the last 12 months, which again is the fastest rise in 40 years, was ahead of expectations. So quite a bit of volatility for markets over that. So inflation's a really big topic, which brings me to next week's stuff to watch. So on Monday, got Japanese GDP. So how well or how badly is the Japanese economy doing? Tuesday, EU GDP. How is it going in the Eurozone from a GDP point of view? We did have, actually, I should mention it while we're on it. Let me just drag this across from the BBC. We had the UK GDP out this morning, and the UK economy grew by 7.5% in 2021. Fastest growth since 1941. But of course, we need to view that into context by how much you can see on the chart here, kindly provided by the BBC and the Office for National Statistics. You know, you can see what 2020 looked like, so it's not surprising we've seen something of a bounce back. So the GDP numbers, you know, are going to be interesting next week. But for me, and I think for markets, it's going to be Wednesday, could be a bit of an interesting day. We've got China inflation out early in the morning. And then we've got UK inflation out a bit later on in the morning, but still in the morning. And clearly, you know, inflation really is the massive topic for markets at the moment. Before we get into the stuff, just a quick reminder of where to go. So Capital.com to open an account, open a demo account, download our apps, read market analysis, all that sort of stuff. Any questions after this, drop me an email, david.jones@capital.com. You can follow me on Twitter, @JonesTheMarkets on Twitter. You can find out more about me and the trading course I run on jonesthemarkets.com. You can follow Capital.com on YouTube, Twitter, and Facebook. Right, let's jump into it. So let's start off with stock markets. It was yesterday, the inflation data, wasn't it? For some reason, I had it in my... Was it yesterday or the day before? I remember when I look at the markets, I had it in my head. It was Thursday, but it was here. It was yesterday. So this is the S&P 500. So the broader US stock market index. And this was the effect. So this is when the inflation number came out yesterday at 1:30. So when it came out UK time. And you can see, because it was worse than expected. So it really knocked markets. Then markets thought, actually, this isn't too bad for a few hours. And then we saw quite a heavy sell-off for stock markets into the close last night. So it could be an interesting day today. And the concern is, you know, this time last year, when central banks were talking about inflation, they were saying, well, we might have high inflation, but it won't be around for long. And clearly, with inflation again coming in higher than expected in the latest data yesterday from the States, it is higher than expected and it is hanging around for longer. So it's a much bigger problem than central bankers were thinking a year ago. And already some are speculating that the rate rise in the US, which we're expecting to happen in March, is going to be extra large, supersized, a supersized rate rise with no fries. So the expectation is that the Americans might have to do 0.5% rate rise in March. So again, I think this is a confusing conundrum for markets at the moment, the whole inflation and interest rate things, but it does make, it makes for quite a bit of volatility this year compared to last year, obviously. But let's take a look. This is the S&P 500. So we had this great run clearly from April, March 2020, and even at the beginning of this year, the S&P pushed out 4th of Jan, something like that, to fresh all-time highs, and investors had been rewarded for buying the dips, blah blah blah. But the dip we're going through, or we have been through, into the late January lows, is clearly much bigger than dips investors have been used to over the last 18 months or so. And I think this is the question for stock markets at the moment, and I certainly don't have the answer yet. Is this the end of that trend from March, April 2020? And we're going to go into a bear market. We're going to see a proper decline in stock markets, that doesn't just last a few weeks. Or is this just a buying opportunity again because of the increased volatility, because of inflation and the worries about stock valuations? I don't know yet, or I don't have a firm opinion yet. I think for me, clearly, the really interesting levels to watch are these lows from January. So on the S&P, 42.20, and the market's bounced back strongly. It's bounced back, even now, we're about 300 points higher, not quite 300 points higher. So about, 7% higher than those lows we saw in January. I wonder if we have just something of a choppy sideways market, maybe for a few months, until we have a better idea about inflation and interest rates. But it's definitely, I think, this year certainly been a different market to last year. I suppose, there's an aggressive trade now, if we wanted to do it. If we flip this over to the hourlies, if we look where markets have been knocked back to, back at the beginning of Feb, or a week ago actually, got knocked back to 44.50. Market rallied 100 and something points, 120, 130 points. And overnight, early hours of the morning, or 5 o'clock this morning, traded down to 44.60. So 44.50 to 60 has been good support. So I suppose if you wanted to trade the S&P this afternoon, then for me, those would be levels I'd be watching for a bounce if we saw any weakness. So quite choppy markets, I think. If we take a look at the Nasdaq 100, we're going to see a similar sort of picture across these markets. I just seen someone's posted in a language, not sure what that language is in the chat, but if you could run that through Google Translate, if you'd like me to answer that'd be great. So the same for the Nasdaq. We've seen a big sell-off from November was the last all-time high in the Nasdaq at 16.8. The market traded down to about 13.7 in January. And again, what is it? Is it a new bear market? Is it a buying opportunity? I don't really know, to be honest. I think we need to see a bit more of a recovery from here to be confident that we're not going to go lower. So for me, again, perhaps sideways choppiness is what we can expect. The Ftse, let's have a look at the old Ftse 100s, the UK stock market. I mean, this I think we mentioned this last week. This is actually the Ftse 100 yet again doing its own thing. Look at that. The Ftse yesterday pushed up to 76.94, which was a new high for this recovery. It's not new all-time highs, but it's a new high for this 22-month recovery, whatever it is. The Ftse, I think I've said this a couple of times this year because of the volatility we're seeing in stock markets. The Ftse 100 has quite a different makeup, I think, the stocks in the Ftse compared to the stocks in the S&P and definitely the stocks in the Nasdaq. The Ftse, you'd say is, or I'd say, is a more defensive makeup. Not the goal-getting crazy growth stocks like the Netflixes and the Teslas. Are more defensive. So again, when markets are a bit volatile and people are worried about valuations, perhaps not too surprising that the Ftse's done well. But there you go, great performance of the Ftse. So for the first time in a very long time, the Ftse is outperforming the US market. So the Ftse, if you bought the Ftse end of 2021, you're positive for the year. And you're probably wondering, what's all this fuss about stock markets going down? My Ftse's going up. So the Ftse's doing well so far. And again, I think if we saw a bigger dip in the Ftse, still looks like a buying opportunity. If we take a look at the DAX, the German market, so the DAX, not as defensive as the Ftse, not as aggressive as the S&P, but again, has a mix of perhaps traditional companies, I suppose like the BMWs of the world, and some tech stocks in there as well. I mean, the DAX has been, you can see, how important 14.8 or thereabouts has been on the DAX going back to May last year. So pretty sideways over the last 9 months or so, but there's been a good floor for the DAX. So a bit sideways the DAX, but well supported. And then finally the Nikkei, which again did its own thing last year. It is quite interesting that we have seen, I think, over the last 12 months or so, a bit of a decoupling, with stock markets all sort of following the US, that Ftse hitting a fresh recovery high yesterday is a great example. So the Nikkei, and again, normally I have quite firm opinions on things, but the Nikkei, there's an argument for being a buyer or a seller, which is to completely sit on the fence. So if I was going to buy the Nikkei now at 27,358, I'd put my stop the other side of that low, 26,000 from January. So I'd be a buyer with a stop under there. And that's quite a good trade in terms of risk reward if it came off, if we saw a recovery from here. But then there's also the flip side that actually, if we go back to September last year, the trend for the Nikkei is down, and only in January it slipped to its worst levels since November 2020. So a real mixed picture. And that's why I think that perhaps the best thing to do, maybe the best expectation, or for me, how I'm looking to trade it anyway, is sideways. Volatility in sideways is how I think. Someone said, is there a smart trade on the S&P to go short at 3,800 or somewhere like that if we go in a bear market? I think on the S&P, if we do see a sustained sell-off, then yeah, I would definitely be looking, like on the way up, we were doing various trades buying the dips. If we do see this market really start to correct or sell off and go into a bear market, definitely look to sell strength. I mean, if you are absolutely convinced today that we're going into a bear market, you could go short now at 4,500, and the closest I'd want my stop is somewhere the other side of 4,600. Because if we start pushing up here, it looks like the recovery's on. So I think it's really interesting, but difficult to call. I think I've got a couple of trades in this account on the S&P, or one trade I should say. When did we do that? I don't know what that was for. So I bought that at 43.53 at the end of Jan. So that's up £250. I should move the stop loss on that. I never pay enough attention to these trades in this account. I put the trade on in the video and completely forget about it. Let's just move that stop to break even. So I'm long the S&P in this account at the moment, and I do think stock markets are difficult to call at the moment. So let's see. Let's take a look at currency markets. It's been an interesting week for currency markets because of this US inflation data, because of dollar volatility. So I'm going to start off by looking at the dollar index. Big fan of this market. I think I've said a few times, if you want to trade currencies, but you don't want to watch, 10 different currency markets and you only want to watch one thing, dollar index is a good one to watch, because it's the dollar against a basket of other currencies, the euro, the Swiss franc, the yen, the pound, the Canadian dollar, and some others. And I think it's a really interesting one to watch. So not surprisingly, if we flip this over to a short-term chart, So when the inflation data comes out, here we go. So again, the market really was not sure what to make of it. So this is the inflation data yesterday, right? So 130 yesterday. Inflation comes in much higher than expected. So everyone thinks, well, that means interest rates are going to go up quicker and maybe larger than expected. This is good for the US dollar. And we see the US dollar jump quite sizably higher relative to where it had been trading up until for an hour. And then over the next hour and a bit, completely dumps. And then we're back again. So this for me is quite, I don't really trade over news because I just think you get these almost headless chicken movements where the market thinks, oh, this is really great. And then it thinks, actually, this isn't really that great. And then from last night, it thinks, oh, actually, maybe it might be good. So I think it's always quite a good idea to let the dust settle. But if we go back to the chart, for me, that trend is still up in the US dollar. I think I said a couple of times, it's been a great market for me in my own account over the last few years because we've had some good trends. I think we have fairly smooth trends in the dollar index. And for me, looking at it now, if I didn't, I do have a trade on the dollar index, but if I didn't, and clearly nothing today is financial advice, I'd be a buyer. And the closest I'd put my stop would be the other side of these January lows. So I think the dollar index, really interesting market to watch. Just end of Jan hit its best levels since July 2020. So really interesting market, the dollar index. But let's get into a couple of currency pairs. I traded the pound this week for my own account. I came out of it yesterday, but I did a trade. I'll show you the trade. It was here I bought it, the 7th of Feb. So whenever that was, beginning of the week. And I bought it because I thought after this run up and it had sold off, perhaps it'll have another little run up. So I bought it in here somewhere, about 135.35, I think is where I bought it. So in here. And again, it blipped up yesterday to 136.40. So I came out the trade on the way down. So I made a little bit, didn't make in terms of versus my risk, didn't make loads. But again, this is another market that I think is a bit tricky at the moment. I am still leaning, because on the dollar, I think that trend for the dollar is still up. So if the trend for the dollar is going to go up, then I'd have to say that the pound's going to go down, But I think, again, it's another tricky one where we have this downtrend that had been in place since May of last year. Right, the market's broken out and it's fallen, but we still have lower highs and lower lows, even though that trend line has broken. So I would still be leaning towards being a seller into strength. And what would change my mind would be a break through 138. So if the market managed to rally a couple of $100, got 100 points from here, I changed my mind, and I think that perhaps we'll see a recovery for the pound. But so it's been a bit of a reasonable volatility this week, but you can see no real direction from where we were a week ago for the pound. Okay, the other one, euro US dollar. We did a video this week on the euro against the dollar. Here it is. I did a trade in the video. I think that's yesterday's video. That is. So if you want to see a bit more of my thinking behind the reason behind this trade. It went short yesterday. It's up about 50 quid so far. But euro US dollar, I'd say arguably is a better short than the pound. So the trend for euro against the dollar has been down again since May last year. We've seen the euro go from 122 down to 111-ish in January. Really sharp bounce back into Feb, but my thinking behind this bounce back in the video from yesterday, which is on the channel, was it's overdone. The bounce back's overdone. Sell it short, and so far at least that's worked. And it was for fans of RSIs. It was overbought on the RSI, so we'll see how that trade works out. But for me, because again I think the dollar's going to go up, then this should put pressure on the likes of euro dollar and the pound against dollar. We'll see how it plays out. I've seen that someone's asked about euro sterling, so we'll have a quick look at euro sterling. I think I said last week that I remember saying we looked at this last week, and I said it's quite interesting where it's traded down to. So it had in January traded down to its lowest since the end of 2019. So we saw, a 2-year low on the euro against the pound. And I said, well, that's quite interesting because it's a big level there, but I'd still be looking to sell any bounces for now. And for me, that trend in euro against the pound is still down, and that would have worked well in hindsight. Best trades always work well in hindsight, obviously, but that would have worked well in hindsight. So I do wonder if in euro sterling, we're going to have another look at those lows down around 83 in euro sterling. Let's see what happens. Right, let's have a look at gold, silver, and oil. Then we'll take a look at some of the cryptos. I think this is gold. Could be set for an interesting year, perhaps. It's yesterday. It was actually positive for the year so far. If you watched any of our videos last year on gold, I'd always moan in the videos what a boring market gold was for much of 2021, and it really was. There were swings, but overall, gold was down 3% last year. Coming into this year, fans of gold may think, well, this is the year that gold makes its great comeback because of inflation. And you could counter that by saying, well, everyone knows inflation's high and gold is not exactly racing away, is it? And the problem is, if we see rates in the US rise quicker than expected, that's good for the dollar, and a rising US dollar puts pressure on gold. So we have this bit of a tug of war potential this year, I think, between gold and the US dollar. Saying all that, the trend from August is still up on gold. Okay, so it's still happily chugging away. Lovely little move back in late January to that trend line. We've seen the market rally about $40 off there. So for me, I think, like I said in the most recent gold video that we did, weakness below 1800 looks like an interesting buying opportunity if you wanted to buy into that trend. So again, I think it will be a long time, and how long, I don't know, before we see gold above $2,000 again. But there's a nice little trend chugging away in gold. So let's see how that one works out. If we take a look at silver, silver is still boring, to be honest. But we've got a definite floor for the price of silver at $21.50. Any weakness back to there, it looks interesting, but otherwise it looks pretty boring, silver. So there you go. And oil's another one I traded this week. I'm still in that trade actually, and I've got a couple of trades you can see on this account here, a couple of that, and they're doing really well, those trades. I think they're quite old trades. Let's take a look at them. 6th of December, bought it at $68. The market's currently $89. Great trade. I'll say that again. And then the 21st of January, bought it at 83. So there's a couple of trades on this account running on oil from previous videos. And I bought it this week. I basically just bought the dip. The market had moved out to, this was another fresh 7-year high on the 4th of February. That was last Friday. It backed off a bit this week, so I bought the dip. And I'm in the trade. I'm just going to see if it breaks out through there. But what can you do with oil? It is. I think it is crazy that we're this high in oil. We're up at $89, $90 on oil, a 7-year high, from $10 not even a couple of years ago. There was an interesting article in the Ft yesterday about how much of oil trading, let me see if I can find it, is driven by algos these days. So computerized trading. Let me see if I can find the story. There was some interesting stats in there. But I think from memory, it was something like 65% of trade in the oil market was driven by algos. And I'm not sure how that compares with other markets. Here we go. Here's the story. Beware the algorithms driving up oil prices. So this is from the Ft. So scroll down. And it was basically, I think it was trying to make the argument that, here we go, some 80% of any energy trades were being executed by automated inputs, not manual transactions, up from 65% 6 years ago. And I think the article was trying to make the argument that if oil reverses, because it is, an algo-driven market, it could be a pretty sharp reversal. we'll see. We'll see what happens. But I thought it was an interesting take on what the journalist thought was going on in oil. But for now, the trend is still up. So regardless of who's pushing buy or sell, the big trend is still up. The trend off the December 20th lows is still up. For me, I'd still be a buyer on oil. If we had a deeper sell-off to like 84, it still looks to be an interesting level. So for me, I think it's only if we start trading below 81, 82 on oil does it start to look as if it's running out of steam, the oil market. So interesting market, little bit sideways over the last few days. I'm long. I'm trying to see if we can break up through 90 again. Let's see what happens. So we did gold, silver, and oil. Let's take a look at Bitcoin. I think this is interesting. Where is it trading now? About 44. So, we've looked at this. We've watched this trend on the way down. And I said, I think we've got to wait and see if this trend breaks. We've seen a break in the trend. In the market, the Bitcoin has gone from 33,000 to about 44,000 today in a matter of a few weeks. 30% move, not unusual for the crazy world of crypto. So for me, I would like to be a buyer, but I'd like to buy a dip. And of course, the problem is if I wait for the dip never comes and the thing goes back to 68,000. But I think we've definitely seen, not definitely, but I think we have seen, something of a shift in sentiment towards the Bitcoin over the last few weeks. So that's an interesting one to watch. If it comes under a bit of pressure next week and dips below 40,000, is it going to be another opportunity? Let's see what happens. Ethereum. Oh, natural gas. I didn't look at natural gas. Forgot that. We'll look at that one as well. Natural gas, Ethereum we're looking at now. So Ethereum did break the uptrend from December 2020. Someone's asking me if I can share the link for that oil article. Good point. I've got absolutely no idea if I can do that. Let me see. I'll share it, but I think you might need to be logged in to the FT. You might need an FT account, but maybe you don't. Oh no, it says, here we go. I can create a gift link. There we go. Hold on a second. So let me put that in the chat. There you go. So Ethereum, long-term trend came under some pressure in early Jan. But again, as I often say, the first break of the trend, I'll give it a second chance. And so far that's worked okay. I don't think it's as compelling a trade at the moment as Bitcoin is. I think it's a bit more of a wait and see, Ethereum. But again, clearly we're seeing a bit more sustainable strength over the last couple of weeks in these two major cryptos than what we've seen since November, really. So I think they're interesting ones to watch next week. Now, natural gas. I had a trade open last week on natural gas, and I remember saying, natural gas is a crazy market. It can reverse just as quickly as it goes up, and that's exactly what it's done. It is nuts, natural gas. I think I've said a few times, it was a really good market for me last year as a trend follower because, we had this great trend from April last year. We're just in the middle of doing an explainer video for natural gas, which will go out, I don't know when it'll go out, in the next week or so. Talking about what drives natural gas and everything else. And I think out of the major markets, I would say it is probably the craziest if we eliminate crypto. You can see the move. So gas traded up to $5.30 and here we are at $3.89 about 9 days later. So massive volatility. I don't have a position on natural gas. I think there's a couple of old trades in here that I haven't really paid attention to. That are losing money. I should really have moved the stops on those. I didn't. But for me, I would still be tempted to be thinking about being a buyer in natural gas. So I think that's another one to watch next week. We saw a lot of support from December through to Jan ahead of 350 on natural gas. It's 389 at the time of recording. Oh, someone said I trust our gas bills will come down just as quickly. It's really interesting that though, because it's a really interesting how when stories hit the mainstream media, so BBC News and the papers and all of that, a market story, more often than not, you would have seen that in the financial markets well ahead of the fact. So you'll know if you're in the UK and probably in Europe and everywhere else, a big consumer finance story at the moment is our gas prices are going to go through the absolute roof, and there's no deals, there's no discounted tariffs. And this sort of started hitting the press, I think in October, November last year. Big issue at the moment, saying the government should provide loans, all this sort of stuff. But if you were watching gas last year, you'd have known that, because we saw this gas price just exploding, and it was about here that it hits the newsstands, and look where we are now. So I wonder if this. It depends how quickly the energy companies react, doesn't it? But I wonder if we saw a reversal in natural gas and this trend starting to break. Does it end up being a non-story a bit quicker than we thought? Anyway, let's see. What are we doing? I've forgotten where we are now. Did natural gas? I think we've done everything. Done natural gas, oil, FX, indices. Yeah, we've done all that, haven't we? So I'll jump into the questions now and take a look at some of the stuff you want looking at. So I think that there's an awful lot to watch. Like I say, with stock markets, I saw someone asking about the Nasdaq. We did do the Nasdaq, but stock markets, I think, for me anyway, the jury is still out on stock markets. Is this the end of the 18-month trend? Is this just a great buying opportunity inspired by much more volatility than we've seen? I don't know. So for my trading, I'm taking the view we're not going to have big directional moves in the next few weeks at least. We're going to have volatility and choppiness, so and until the market does something different, that's my view. So I think it's much harder market to call. More interesting markets for me at the moment is the likes of the dollar index, because the trend from May last year is still up. Oil, because the big trend is still up in oil, and cryptos, because cryptos, if you can trade them where you are, depending on whereabouts in the world that you are, I think it's interesting that we've seen a bit of a run in strength over the last couple of weeks in cryptos. I think we've still got, the theme is still quite confused markets because of this uncertainty about inflation. And I think that's going to continue to be an issue. But let's jump into the questions and have a look at some of the questions. Singapore dollar, Japanese yen. There we go. We're going a little bit left field for the first thing. The first request. Oh, I keep remembering this. We keep coming back to this one, don't we? And it's broken out, isn't it? It's really. I remember saying last time, man, it's really interesting, and it is still really interesting. So for me, I would be thinking about being a buyer, because we've had such a big break. And I think the last time we looked at this, I said, if you want to go short, it's a great place to go short, because we've got this massive level, 3-year highs in Singapore dollar, Japanese yen. And it's broken out, hasn't it? So for me, what I would do, it's only spent the last two or 3 days above this level. For me, I'd be looking to buy a dip. So I'm quite happy to trade breakouts. The way I trade them, I wait for the thing to dip back. The risk is it doesn't dip back and I miss out on it. But for me, I think that's an interesting market to watch next week. There we go. There's another one in the mix. Because I would say the trend from, we've got the bigger trend anyway. The trend from November is still up. It'd be interesting if it comes under some pressure next week. Where does it stop? And that could be an interesting trade. So thanks for flagging that one up. What else have we got? Natural gas. We looked at natural gas. We looked at gold. Tesla. So look at Tesla. I've got no idea where Tesla is. I'm going to guess it's below $1,000. Must be below $1,000. I reckon it's flipping around 900 to 850. Oh, look at that. See? Genius. I haven't looked at it in weeks and it's 900. Actually, it's not done anything, has it? It's not done anything, really, for a week now, Tesla. But for me, that big trend is still up. But the way you phrase the question, I think, is interesting. And I've lost where it is now. But asking about, interest rates and growth stocks. And that's really the big question for this year, is what impact are higher interest rates going to have on some of these more aggressive stocks such as Tesla? And again, I think we don't know yet. We don't know. And you can see that reflected in the price action of Tesla. It's trading where it was towards the end of Jan. But for me, the big trend is still up. So I'd still be, if I was a buyer now at $900, the absolute closest I'd want my stop would be the other side of wherever it is, 790. So, but I'd probably wait and see what happens. But that big trend is still up in Tesla, but you're right, we're all a bit waiting to see what happens. Platinum, let's have a look at Platinum. I do have a trade on Platinum in my own account. I don't think it's doing much. No, it's not. Here we go. I've had this trade for a long time in Platinum, and my reasoning behind the trade, we had the correction from May into September, rallies, comes back, perfect little opportunity here, buys, and then bang, it's done nothing for about 3 or 4 weeks now. So for me, I'm long. I still think we might see the price rise, but we're just not seeing much excitement, are we? So for me, if it got knocked back to like the mid 900s again, it looks like a buying opportunity. But no, it's really struggled to get much interest, Platinum, I think, in the last few months. So, but for me, I'd still be leaning towards perhaps we're seeing that downtrend reverse. Let me just do the contacts again quickly before I get into more stuff. So don't forget to open an account, find out more, go to Capital.com, david.jones@Capital.com. Any questions? @JonesTheMarkets, that's me on Twitter, and JonesTheMarkets.com is the website, and follow Capital.com on YouTube, Twitter, and Facebook. Okay. Right, back to the questions. Gold, we looked at gold, we looked at cryptos. David, why am I deducted dividends? I did not make any trade in IBM. Please help me. Well, I think, take it up with support, but are you? I don't know. If you're not haven't got a trade in IBM, I don't know why you'd be deducted dividends in IBM. I would double check that, because you look on my account, right? So this account. You can see I got a dividend adjustment in the S&P. So because I'm long the S&P, I received a dividend of 30 massive pence in the S&P overnight. I'm paying margin, obviously, on some trades. I've got an overnight fee for crude oil credit. I got debited Caterpillar because I'm leveraged on Caterpillar. So I would just double check that is it dividends you're being adjusted. And I don't know why you'd be getting deducted dividends if you didn't have a position in IBM, or getting paid dividends. So just double check what it is and take it up with our support, or send me a screenshot and I'll have a look as well. But clearly all this stuff is automated, so I'm a little bit confused by that one. We looked at Euro Sterling, New Zealand dollar, Japanese yen. Let's have a look at that. Nzd Jpy. That to me looks a little bit boring at the moment, I'd say, because again, the problem I'd have with that is it's sort of halfway in the range of the last few months, isn't it? So what would you do? If it got knocked back to an extreme, like back down towards 75.50, I think it's an interesting trade. In the short term, definitely, over the last couple of weeks, the trend is up, isn't it? So if I was looking at that chart, the hourly chart, hang on a second, I would be looking to be a buyer on dips, yeah. So that was a good trade. Again, our little hindsight trades from 6 o'clock this morning. That was a good trade. So for me, yeah, buyer in dips in the short term on New Zealand dollar, Japanese yen, and a little bit nothing in the more medium term view on that one for me. Twitter and PayPal. Let's have a look at those. Did Twitter have good numbers or something yesterday? I'm sure, wasn't there something? Let me have a quick Google. Twitter, didn't I see something about Twitter? Twitter misses earnings expectations across the board. There you go. That's why you should never rely on me for fundamental information. Twitter earnings for the fourth quarter on Thursday that missed analyst estimates on earnings, revenue, and user growth. Nice. Twitter does the hat trick. That's pretty weak, isn't it? We did have this great trend on Twitter for a while, and we're well out of that since October last year. I would argue the trend is still down on Twitter. What's interesting here, right, is to blend the fundamental and the technical approach. Clearly, most of what I do is charts and trends and stuff. But it's quite interesting that they had absolutely dire results last night, missing expectations, but it's not like the stock has fallen off a cliff. So perhaps we're getting to the stage where the bad news is discounted into the Twitter price. So for me, on that basis, an aggressive trade, let's do this one actually, we haven't done a trade today, would be a buyer of Twitter at wherever it is now with a stop under 32. So let's do that. So we've had this really horrible numbers last night for Twitter, but the stock hasn't really fallen off a cliff. So let's buy them. I'm going to buy 22 shares in Twitter at 37.32. Stop under 31, so under the lows for the year. Let's chuck that one into the trading basket and see how that one works. But from a technical point of view, if I was looking to be a longer term buyer of Twitter, I'd say that trend was still down, and I'd still be a little bit patient. But it's interesting that it had, pretty horrible earnings, but we're not seeing it reflected in the price. Yeah, so there's a little Twitter trade in there somewhere. It's making money already, 48 pence, 32 pence. So there we go. Let's see what happens. And PayPal was the other one, wasn't it? I mean, PayPal's stock has been absolutely clobbered, hasn't it? Oh, it's still going down as well. Look at that, terrible. So the PayPal price has gone from, where was it? $310 last summer to $119 today. So we're back on PayPal to April 2020 levels. So it's interesting, isn't it? So for me, still going down, really weak. Difficult to go short here for me, because where would I put my stop loss? Because only a week or so ago, it was trading at $130. So if I was going to go short, I'd need a wide-ish stop loss. For me personally, I have absolutely no interest in buying that because it's just been so bombed out now. So for me, it's an interesting one to watch, but probably not one for a trade, to be honest. We looked at natural gas. We looked at the Nasdaq. Hang on a sec. We looked at euro sterling. Thungela Group. I don't know if I'm pronouncing that right. Let's have a look. Thungela Resources. What do they do? Oh, we haven't got any data on that at all. Mining and production of thermal coal in South Africa. Well, we've got a massive. Why haven't we got really patchy data? I mean, for me, I would look at a chart like that and then immediately go and look at something else, because I mean, it looks really thinly traded to me. I don't know if we've got maybe the wrong data coming in, but there's not. I mean, the trend is up based on what we have there in front of us. We just don't have a lot there in front of us, so it's not one for me, to be honest. Alibaba. I mean, that's a really popular one with clients. That I think I always say the trend is down, and it is still down. The trend is definitely still down. You could make the argument, I suppose, if you were trying to make the bullish case, that it has at least stopped making new lows since December. So if you absolutely had to buy it now, I would put a stop loss the other side of 108. But for me, that big trend, going back a year and about 4 months now, is still down. So for me, I'd be in no hurry to be a buyer. Meta. Now Meta is interesting. I did a video. There's a video this week on the channel where we looked at Meta, and I bought it. So I'll show you the trade. So Meta, of course, is the old Facebook. So a buyer of Meta at 8th of Feb. So I bought them at 221. They're 225 today. And I think it's interesting from a contrarian point of view. So, from a trend point of view, absolutely wouldn't buy that, really, from a trend point of view. Because, the thing has gone from 380 to 225 or 224, where we are today. But when we did the video earlier this week, I thought that actually maybe as a higher risk, has the sentiment been overdone trade? I thought it was interesting, really looking at this $200 level on Meta or Facebook. We had the lows in 2020 at $200, pushes higher, comes back to it in June 2020 and holds ahead of $200, and then just carries on higher. So we saw the Facebook Meta shares hit because two reasons. Daily average users of Facebook dropped for the first time in its history, and the company did say they were seeing increased competition from the likes of TikTok and all that sort of nonsense. Does that justify the stock falling by 30%? I don't know. But I thought, at sort of 220 or thereabouts, it was an interesting trade. So that's my reasoning behind it. Has the move been overdone? But again, that was on this account, the one we use for the videos. In my own account, I'd probably still be sitting on my hands to see, does it hold in this 200 to 220 area? So I think it is interesting to watch it down here and see what happens. Right. If you don't mind, could you tell me, when you buy shares in your video, is it possible to change or cancel the order the next day? Sorry for this question, but I'm still learning. That's okay. That's a fine question to ask. We all start somewhere. Unfortunately not. You can't. It's not like buying a pair of shoes and you change your mind the next day and you take it back with your receipt. If you buy them, you bought them and you're in. So you can't go back and change your mind the next day. So that's how financial markets work. If you buy it or sell it, then the deal's done. You don't have the opportunity to go and wind it back. I have seen that question come up a lot actually over the last year. I think there's been a lot of new traders come into markets over the last year, which is good. But you know, once it's done, it's done. So yeah, you can't change your mind. It's not like signing a contract for a credit card where you get a cooling off period. Can we have a look at Strix Group? Strix Group, let's have a look at those. STRIX, never heard of them. Oh, I don't think we have them actually. So I don't think we cover those. Let me put in the code you said. No, we don't do those, sorry. Can we lose stop loss on oil positions? Open your account. Yeah, where are my stop losses on oil? Where are they? 84.75 and 83. Where's oil? 89. Yeah, let's bump them up. Let me at least try and lock in some of this profit, because I always forget. We'll move them all to 86. You want to give back all that profit. Can we look at dollar yen? Dollar yen, is it a good buy? Dollar yen's, again, it's been an interesting market this week, been really volatile. I mean, I think on dollar yen, this is the daily chart we're looking at. Clearly, you know, because of the dollar strength, the trend for dollar yen is still up. Would I buy it here? Me, no, I wouldn't buy it here because it struggled again with these highs from earlier in January at 116. Would I buy a dip? Then yes, I would. It'd be great. I think if it dipped down to 114, it looks like an interesting trade. If it breaks out through 116.5, it looks interesting. But at the moment, I'd probably be happier trying to see if there's a dip to buy on dollar yen. We did look at silver, so you can take a look at that in the recording. Silver is still boring, to be honest. $21.50 is the support on silver. Investec, so look at Investec. So the fund management company, isn't it? Yeah, global financial service company, blah, blah, blah. Nice trend, isn't it, in Investec? It did terribly from 2018, didn't it? It's interesting. Did really badly from then, but a lovely trend since whenever it was. Let's pick up on that. So this is the US stock, UK stock, sorry. So it looks something like that. So again, for me, I'd rather buy a dip. The risk is the dip doesn't happen. Maybe an aggressive trade is like that. But yeah, I would definitely be looking to be a buyer. But I would just be a little bit worried, perhaps like the Ftse, perhaps we're seeing perhaps a bit of the mirroring a little bit of what's going on with the Ftse. You know, are we going to see £4.70 or thereabouts be a problem? But for me, I'd still be looking to be a buyer of dips on Investec. Feeder cattle at 52-week high. I don't think we cover feeder cattle, but that's an interesting one. We don't cover it yet, feeder cattle. 52 at meat will become unaffordable soon. We're all going to become vegans, aren't we? But saying that, soybeans had a big run over the last few weeks. So I'm just seeing if I can see feeder cattle in my charting software. Feeder. Oh, hang on a sec. I think it'd be interesting to look at because all of these commodities are still going up. Oh no, I don't have it. And there's an no. All right, let's forget about that. But interesting. Thanks for mentioning that. What else have we got? What time is it? 20 past. Uranium. I don't think we cover uranium. Are we going towards an economic collapse, market crash? I don't think so. I don't think, famous last words, we're going to wake up one day and markets are down 30%. Whether we go into an economic slowdown and we have much more challenging times for stock markets, you know, because we have had it pretty good, you know, over the last couple of years. We had that really quick correction, bear market, whatever you call it, in February, March 2020 because of Corona, and then the market just carried on up since then. You know, this is the S&P. If we look at the last 5 years of the S&P, you can see, you know, just how investors have been spoilt, I would say, by the last 18 months in the S&P. Are we going to see that again over the next 18 months? I can't see that, to be honest. But are we going to see the market just go bang down to here? I can't see that either. So perhaps we just have, I think, more challenging markets from here. Let's see. Let's see what happens. Would Disney be a buy? Let's have a look at Disney. I think their share price has been under pressure, hasn't it? I think it's almost the perfect short, Disney, looking at that. I remember that we've clearly looked at them before because that was a trend line. So again, I think our hindsight trade was yesterday. And maybe even today, actually. Maybe that's another trade we'll do. Because Disney had been this great run from March 2020 up into 2021. And I remember I think that was the pop in 2019 when they announced Disney Plus, the streaming channel. But maybe it's a short on Disney. Let's do a short. We bought Twitter. So I think the trend is down for Disney since August last year. And it spiked into 160 yesterday and has come off. So I'm going to go short with a stop at 175. So I think that maybe Disney will go back to 130. Let's set that up. So 175 on a stop. How many shares are we going to sell for 100 quid risk? If we sell one share, what's that going to be? 7 shares. Okay, 7. We're going to go short 7 Disney at 153 because I just wonder. There we go. Is this trend still down? Yeah, and it's had a bit of a move, but it doesn't really change the overall trend. Let's see what happens. So I think perhaps it'll come under some pressure if that trend is going to continue. Can we have a look at sterling yen? I've got a trade open on sterling yen actually at the moment. Last year, first 6 months of last year was a great market to trade sterling yen, and then it all went a little bit sideways really from about May last year. You can see actually, look how well this old level did in sterling yen. 148 on sterling yen. It was the lows in March, it was the lows in July, pretty much the lows in August and September, and again in December. So I'm long sterling yen at the moment, but it has had a real problem with about 158 since October last year. So I'm long. I've got a trailing stop on it and see what happens. So for me, I wouldn't buy it here personally. I think if it starts breaking through 158 next week, it looks interesting. If you thought that maybe it's gone too far, it's a good place to go short because you've got an obvious level for your stop. So for me, it is all about this sort of 158. How high did it get yesterday? 158.05. So it's all about this 158 level in sterling yen. I think that'd be an interesting one to come back to next week and see what happens with 158 because it's been a real problem. So yeah, let's come back to it and see what happens. Any tips for beginners? So many tips for beginners. Don't lose money. Rule number 1. Rule number 2. Go back to rule number 1. Of course, you know, in trading, I think the thing that everyone focuses on in the beginning and probably for a long time after is being right. Being right all the time or a lot of the time is nowhere near as important as you think it is. There was a really interesting study. I think if you go to my website, jonesandmarcus.com, I think there's a little snippet of it, I think, or maybe not. I'll put it up. But basically, a broker about 10 years ago now did a study of its clients over 4 million trades. And over 4 million trades, the clients were right more than 50% of the time. I think it averaged out about 53% of trades, something like that, were closed for a profit. But as we know, most people lose money when trading because what's much more important is how much you make when you're right versus how much you lose when you're wrong. So going back to that study, so even though more than half of their trades were right, when they were right, typically they'd make $100, for example, but when they were wrong, typically they'd lose about $190 from memory. So the massive problem is And this will never change. If I'm still doing this in 50 years as an animatronic version of David Jones, it will be exactly the same, okay? People will focus on being right as often as they can. But what's important is when you're right, you have to be making more than you're losing when you're wrong. So for example, in my own trading, I try and aim to make, when I'm right, at least double what I lose when I'm wrong. So if I have a trade and my stop loss is $500 or £500 in the trade, if that ends up being a winning trade, I want that to try and be about £1,000 profit if I'm right, because when I'm wrong, I'm losing 500 quid. So the big mistake everyone makes in the beginning is obsessing about being right or finding a strategy that's right all the time. So for example, I've got a strategy for trading sideways markets that I don't talk about on these because it's a bit different, but it's right 42% of the time, right? So trade it on the S&P, one trade a month, and it works 42% of the time. So the novice trader would say, well, that's a ridiculous strategy because you're wrong more times than you're right. But over the last 12 months, when it's right, it's made almost 3 times as much as it loses when it's wrong. So even though it's wrong, let's say 6 times out of 10, it might lose £100 every time it's wrong, so it loses £600. But the 4 times it's right, it makes nearly £300. So it makes £1,200. So overall, it's a profitable strategy. So I'd say that's a really important thing to think about: the balance between risk and reward, and how much you make when you're right versus how much you lose when you're wrong. But everyone will ignore that. Most people will ignore that, and most people will still be losing traders. Hopefully, you take that on board, and that will be useful for you. Okay, there you go. Good question. Can we have a look at Euro New Zealand dollar? It's quite interesting, actually, that we're looking at some of these currency pairs now. You take the US dollar out of the equation, and it is perhaps a little bit clearer because there's so much going on with the US dollar at the moment because of inflation. Now, this is another interesting one. So euro against the New Zealand dollar, and I'm going to have to think about wrapping things up soon. But, okay, so I'd say that trend is over. And the interesting thing is, do we have a breakout? So that's interesting. So we have these old highs from last summer around 170, 160. And the market poked out, had a good run through those, but has reversed really quickly. So I think here the question is this a false breakout? Or actually, is this a valid breakout and we should buy the dip? I would be quite tempted to buy the dip when it stops going down. At the moment, it's still going down. But I think that's a really interesting market to watch next week. So I would be a buyer of the dip on that, but only when it stops going down. And at the moment, it's still going down. I'm going to have to flip through some of this stuff a bit quickly. Apple. Let's have a look at Apple. Always a popular one, Apple. Trend is up, isn't it? Trend is up on Apple. Great. That was a great buying opportunity. Again, the old hindsight trade back in early January. So for me, still be a buyer on dips. A little bit dull over the last few weeks, which of course is what we're seeing in markets, indices. All a bit sideways. Market's not really sure what's going on. And that's it. Right. I'm going to stop it there, everybody, unfortunately, because I've run out of time. But thanks very much for coming along. If I didn't get to your question, I'm sorry about that. But we'll do it all again next week. To find out more about the company, open an account, download the apps, everything else, go to Capital.com. David.Jones@Capital.com for any questions. At Jones the Markets on Twitter. JonesTheMarkets.com is my website on trading and the trading course I run. And follow Capital.com on YouTube, Twitter, and Facebook. So that's it. Lots going on at the moment. Loads of interesting stuff to watch. Not really sure where stock markets are going yet. Let's see. We've got those inflation numbers out of China and the UK next week, so another volatile week. But I do enjoy doing all these. We'll do it all again next Friday, I think. And if you don't subscribe to